What if the next time your car breaks down or your water heater explodes? You didn't have to panic. Most people are one flat tire away from financial chaos, and that's not hyperbole. Surveys show nearly 40% of Americans couldn't cover a $1,000 emergency without borrowing money or selling something they need. The problem isn't that emergencies are unpredictable. It's that we pretend they won't happen to us until they do. We scroll past articles about emergency funds thinking, yeah, I should probably do that someday. Then someday becomes the day your furnace dies in January and suddenly you're staring at a credit card bill that'll haunt you for years. Here's what an emergency fund actually is. It's the financial cushion that keeps urgent expenses from becoming long-term disasters. Think of it as insurance. You pay yourself money, sitting quietly in an account, doing nothing exciting until it does the most exciting thing possible by saving you from desperation. The classic advice says 3 to 6 months of essential expenses for most people, 6 to 12 months if you're freelancing or working in a volatile industry. But let's be honest, if you're starting from zero, hearing save $20,000 feels about as achievable as sprouting wings and flying to work. So here's the first quick win. Forget the big scary number and start with $1,000. $1,000 covers most common emergencies. The broken phone, the emergency dental visit, the weird noise your car started making that definitely won't fix itself no matter how long you ignore it. You get there by automating small transfers every month, treating savings like a bill you can't skip. $50 here, $100 there, it adds up faster than you think, especially when you throw windfalls at it like tax refunds, work bonuses, or that money you got from finally selling those sneakers you never wore. The where matters almost as much as the how much. You want this money accessible, but not too accessible. High-yield savings accounts or money market accounts that earn you a little interest while keeping the cash liquid enough to grab when disaster strikes. The irony of emergency funds is they work best when you almost forget they exist. The moment you start eyeing that balance, thinking, well, I really want that new TV, and this technically could be an emergency if I squint hard enough, you've already lost. Define your emergencies ahead of time. Job loss, medical bills, critical home or car repairs, things that genuinely disrupt your ability to function. That concert ticket that just went on sale, not an emergency, no matter what your heart tells you at 2 in the morning. Here's where people get it wrong. They either aim too high and quit in frustration or aim too low and stay vulnerable. Your number depends on your job stability, whether you have dependents, whether you're a homeowner, whether your industry could collapse while you sleep. Freelancers and gig workers need bigger cushions because your income can vanish faster than stability ever could. If you're salaried with benefits and solid job security, 3 months might cover you. If you're self-employed in a feast or famine field, 12 months isn't paranoia, it's prudence. The psychological shift happens when you realize this isn't about being pessimistic, it's about being prepared. You're not manifesting disaster by planning for it, you're taking away its power by refusing to let it catch you financially naked. Start small, automate everything, resist the temptation to rate it for wants disguised as needs. The discipline of building and protecting this fund teaches you more about money than any investment strategy ever could because it's about delayed gratification and emotional control. The peace of mind alone is worth the effort, knowing you can handle whatever breaks, fails, or falls apart without spiraling into debt or desperation. That's not just financial security. That's freedom from the low-level panic that keeps people up at night wondering what they'll do when, not if, something goes wrong. Whether you need help getting started in real estate investing, home contracting work, or finding lenders, check out our links in the description below.